Good morning, students. I am C. Ankit Sharma, and I am your tax faculty for next 11 sessions. We will be discussing PGBP provisions, that is profits and gains of business and profession. Then we will move on to capital gain provision, and then income from other sources. As these 5 heads is the part of our syllabus, out of these 5 heads, you have already discussed with other faculties the income under the head salary and income from house property. So balance 3 heads: PGBP, capital gain, and income from other source. What these heads says and how to compute income under these heads, that we will be discussing in our sessions. So a very good morning again to all of you. Good morning, namaskar, Vadakkam, Game Show, etc. And I'm seeing students are also sending the good morning message. Sushil, good morning. Miss Singh, good morning. Ishan, good morning. Darshan, good morning. Vishal, good morning. A very, very, very good morning to all of you and to all the future chartered accountants. So it's a pleasure to be here again in front of all of you to be the part of your journey. And as you already discussed, as you already read, as you already understood the provision regarding the introduction part of income tax with other faculties, then the residential status, then the income exempted section, then salary and income from house property. So you must have a basic knowledge of income tax now, or I can say more than basic knowledge of income tax with yourself. The head we are going to discuss today is PGBP. And that is one of the most important head under income tax. So in intermediate level and as well as in final level, this is the most important head I can say regarding the numerical part, or we can say the percentage of part which it forms with your 100% or 100 marks paper. PGBP head is one of the most important and having the most weighted provisions which will be asked in your examination. But there is a very interesting thing. All the heads you have already read, all the heads what you already understood has one problem. Under income tax, whatever you are reading, the chapters before PGBP, there is an issue in every chapter that the faculty needs to make you understand first the meaning of certain topic or the provision and then the implication. Like when we go through starting provision, you need to understand the HUF. What is the HUF? And then the provision. The definition of person. First of all, the faculty needs to make you understand the meaning of person and then the provisions. The same way, rates of taxes, surcharge, cess, etc. So all the faculties needs to make you understand, first of all, the meaning of that word, like association of person. So the faculty makes you understand what is the meaning of association of person and then the implication. The same thing, the residential status. So first of all, the faculty needs to make you understand what is residential status and then the how to calculate or how to find out the residential status of a person. In the same way, income exempt agricultural income. First of all, we need to make you understand the meaning of agricultural income and then the provision regarding that under income tax. Same, the salary head, of course, you know that's a huge chapter. So we need to make you understand the allowance mean, the perquisite, different kind of perquisite meaning, and then the implication as same in the income from house property. But this PGBP has one benefit for all of you. That the terms we are going to study in this chapter, most of those terms, the meaning of most of those terms you already know. Like we will talk about the depreciation. So you all know the meaning of the basic meaning of depreciation. We will talk about net profit, provisions, reserve, sale, purchase, etc., etc. So the terms we are going to use in this PGBP chapter, that's a good thing that you almost familiar to all the basic meaning of that term, like building, plant and machinery. So we need not to make you understand what is the meaning of building. we expect that because you are on this level, so you already knew the meaning of building, plant and machinery, car, etc., etc. Like depreciation, I told you, the provisions, the bad debts mean, etc., etc. So that's a benefit of this chapter. Only this chapter has this kind of thing. The other chapter, like after this capital gain again, we need to make you understand, first of all, the meaning of certain word and then the implications. So the best thing in this chapter is that you already know the meaning of general terms we are going to use. So we need to understand the implication, etc. That's a good news for all of you, correct? So again, those have joined right now, like Akshay Kumar. Wow, Mr. Akshay Kumar is also here. Bhumika, good morning. Manish Shah, good morning. Diksha, good morning. Navneet, good morning. So let me tell you again, I'm C. Ankit Sharma and I'm your faculty for next 11 sessions. First of all, we need to thank the Board of Studies, the Institute, to give us the opportunity to be the part of your beautiful journey of life to becoming a chartered accountant. And I always say that you should also thank the Board of Study, the ICAI, the coordinators, the technician who are actually working behind this. So we are the face, what you are seeing, but there's a lot of people who are actually working to make this possible, to provide you the classes for your benefit, and that is also free of cost. Nothing is free in this world, but this is absolutely free for you. And this is just because to help you to achieve your goal, to make you a chartered accountant as soon as possible. So let's start this. And before starting, there's something I need to share with you because we are taking this class. So I expect certain kinds of guidelines should be followed. So that will be really beneficial for you to take the most of the advantage from these classes. So discipline is the key to achieve any goal in your life. Discipline, focus, hard work, these are the keys. You can achieve any goal if you are actually doing these things. You have to be disciplined, you have to be focused, you have to work hard for the things. There is no elevator for success. We need to take the stairs. There is no shortcut. So please follow these guidelines when we are taking classes. There are some things you need to understand that notes are based on study material. Beautiful study material framed by our institute. This beautiful study material. So whatever we are studying, these are provision based on our study material, which is issued by ICAI. Okay? The provision we are discussing is for assessment year 23-24 because already you are taking classes of income tax from YouTube or from other faculties. So you already knew that we are discussing the provision for assessment year 23-24. All queries will be taken after 30 to 40 minutes of lecture. So during lecture, you can send me the query, but I will answer queries after 30 or 40 minutes of lecture because if I take queries during the lecture, sending one by one students, that will actually break the provision frequency, the flow of our provision, what we are discussing. So I will take each and every query. Just relax. I am here with you. I'll solve each and everything, whatever you are going to ask. But that will be after 30-40 minutes of lecture. Okay. Please focus during lecture and ask queries related to topic. That's a very, very important request I am making from for all of you. Then please focus during the lecture. There are some students which ask that, sir, please tell once again the provision. So we are on virtual classes. You can scroll back the video and you can again listen what I just said. So do not ask this kind of queries that, sir, please said whatever you just taught us. So please, you can scroll back and check it out. And again, please, queries should be related to the topic. There are some queries which have no relation with the topic. So please do not ask these kind of queries. Like if somebody is asking me what is the meaning of depreciation, that should not be asked at this level. Fine, you can, I expect that you should know the meaning of depreciation. If somebody is want to ask what is the meaning of building. So what is the provision regarding building? What is the meaning of building is given in the study material. That is I'm going to discuss with you. But general things like general queries, you can search on Google, which are not related to our topic. If somebody is asking me these kind of query, I will ignore it. So please be focused and imagine you are a student of CA intermediate. You are not doing BA, you are doing CA. So your query should be up to the mark also. Clear? Please try to take live lectures for better understanding. Those are students who thinks that we'll take class, it's on YouTube after. So that is not the discipline. You should try to take live classes because you can ask your queries only on live classes. Okay. Kindly download notes before lecture for better understanding. I have already uploaded the notes yesterday. So you should go to the site, upload the notes always before the lecture and take the printout of it if it's possible. And then you should study with that prints. Everything is covered in notes. Okay. We'll take MCQ test at the end of each lecture or starting of next lecture. So I'll try to take a MCQ test either at the end of this lecture or before the next lecture. The next lecture will be on 3rd of July. So whatever we will be discussing today regarding that MCQ test will be taken at the end of this lecture, or I prefer because you need to revise it once, then I will take the MCQ test. So it will be on the starting of the next lecture. And the 8th point that is very important. If somebody needs to ask me queries in Hindi, you are most welcome. You can ask me queries in Hindi and I will answer those queries in Hindi only. All other queries, etc. will be in English. I hope it is clear for all of you. And I have a habit that I always believe in these kind of quotes. They actually motivate. So before every class, I am going to share a very good saying or a very good quotes or a very good sentence with you that might help you to create interest in your studies. And this is one of the very beautiful quotes. That is dream big, what you are actually dreaming, that becoming a CA, that's of course a big dream of your life. Stay positive. You have to be positive. Don't take burden of your study. Enjoy your studies. Enjoy this thing. Create interest in your study, and I will tell you how to create interest in your study also. So just relax, be positive all the time. Be positive. Just do not take burden of things upon your head. I was a very average student. Let me tell you this thing very clearly. I was a very average student. So I believe if I can do same, any one of you can do same. You have to believe on yourself. You have to be positive. You should think, yes, I can do this. Do not believe on others. If somebody is saying, see, it's a very difficult course, tumse nahi hoga, you cannot do that. Do not believe on that person. And I say, if I can do this, and this is not a joke, I am seriously saying this. I was not a very bright student. I was not a very bright student till my 10th. But I believe in myself. There was a lot of people who said that you cannot do a CA because you're a very average student. You need a brilliant student. But I say no. We do not need to be a brilliant to become a chartered accountant. We need to be focused, disciplined, and hard work. So I did this and I complete my CA in a very short time. So I will discuss that journey also. We have time about that. But you should understand, dream big, what you have already done. Stay positive all the time. Even if you are start studying from today, even it's possible that you can clear the group in November also, but you have to make a plan. Work hard. Of course, there is no shortcut. You have to work hard in this course and enjoy the journey. Just enjoy this journey because when you will become a CA, you will miss that journey. The time you feel sad, the time you feel broken up, and you have to again stand back and you have to clear this group. So enjoy the journey is very important because zindagi na milegi dobara. So you have to enjoy this journey to becoming a chartered accountant. It's a very beautiful journey, very beautiful journey. Fine. So dream break, stay positive, work hard, enjoy the journey, and find is the details that we are going to discuss: profits and gains of business and profession, paper 4A of income tax law. I am your faculty, C. Ankish Sharma, and we will be together for next 11 session. Okay. Notes has been uploaded on the portal. You can go and find it out. I hope some of you must have downloaded the notes already. So now we are back with our notes and we are studying these notes, and this is our topic, profit and gains of business or profession. Before starting the provision, let me tell you what we are going to discuss in this head. Like under salary head, you understood how to calculate salary income of a person who is an employee of an employer. There are basic salary, there are arrear of salary, there are advanced salary provision, there are perquisites, allowances, deduction, etc., etc. So you understood how to calculate an income which relate to salary or which arise due to a relation of an employer and employee. Clear? The second head, you understood income from house property. So if there is a building, the income of that building will be calculated under income from house property if it is let out or it is self-occupied, etc., etc., etc. So if there is a building, the rental income of that will be taxable under the head income from house property. And if there is an employer-employee relationship, then the income is going to be taxable under the head salary. So these two head of income you have already understood. Now moving on to our head, that is profit and gains of business or profession. So again, I have told you that in other head, like under the head salary, the faculty must have told you that there must be a relationship of employer and employee. Then they must have told you what is the meaning of employee or employer relationship. Then that payment will be called salary. But in this head, as I have told you, that there are terms we already know, like what is the meaning of profit? Because you're a commerce student, you are an intermediate level, so I can expect that we all know what is the meaning of profit and gains also. And what is the meaning of business or profession also? We are going to discuss these terms also. But that is not going to bother you because you generally know the meaning of profits and gains and business or profession. So this is the benefit of this head, that general terms we already know. So we will be discussing the profits, gains, business, profession, etc., each and everything one by one. Just relax and enjoy the study. Whenever you study, you should understand one thing, that wow, we are going to understand something new today. You have this feeling in your mind. Then that will be interesting. Do not take burden. Oh God, somebody told you PGBP head is very difficult. So do not take that burden on your head. Nothing is difficult in this world. Nothing is difficult in this world. We can plan to go to Mars even. So that is a very simple thing. Study at home is very simple. You have all the facilities, all the privilege. You just need to read or learn the provision. So if you are focused, you are disciplined, you are ready to work hard, everything is very simple. Everything, right? So if you work hard, you will win not immediately, but definitely. To becoming a CA, there's a very good mantra that work hard, keep working hard, and you will be achieving your goal. Not immediately even, but definitely you are going to achieve that. So meaning of business and profession. I've inserted some picture for you, so that will create your interest in the notes also. So how to differentiate between business and profession? Let's see. The tax payable by an assessee on his income under this head is in respect of the profits and gains of any business or profession carried on by him or on his behalf during the previous year. We already know the meaning of previous year, assessment year, because these terms have been discussed already in the earlier lectures. So we are not going to discuss it. I have highlighted the words, etc., which are important in a paragraph or a sentence. So whatever I have highlighted, that means that is the important term. So the tax payable on profit on gain of any business or profession, if that is carried out during the previous year, then we need to apply this head to calculate the profit or the gain. We need to understand the meaning of business and profession. So now we will move on to understand the meaning of business or profession. So The term business has been defined in section 213. Like in general terms, if we say what is the meaning of business, that means if any person is doing trading, manufacturing, sale purchase, providing services, etc., that is business. And what is the meaning of profession? If somebody is providing a specific service due to some specific talent, that is technically called a profession. So if I will ask you, let me ask you some question because these are general terms. If I'll ask you what a doctor is, let's see who is going to answer me. What is a doctor? Is a professional or a businessman? Who will answer me? Let's see. What is a doctor? It's a professional or a businessman? It's a very simple question. How we will define a doctor? It's a businessman or a professional? Let's see who's going to answer first. Of course, professional. Well done, Darshan, professional. Harshita, professional. Bhumika is saying doctors are professional. We already knew this thing. Fine. What is a advocate? The professional or a businessman? A professional. What is chartered accountant? A professional or a businessman? Of course, a professional. What is a chartered accountant if he's doing service in a company? Now answer this. What is a chartered accountant if he's doing service and getting salary from a company? Is it a business, professional, or employee? You all are very intelligent, very good. You all are giving the answer correctly. That's very, very, very appreciating. Well done. So a chartered accountant is working in an organization and getting salary. Then he will be a salaried person under income tax. He will be an employee. Okay. Okay, now tell me the answer. If somebody, Mr. A, is a doctor and running a hospital and earning income from that hospital. So for that income, it will be treated as his business or a profession. Now listen this question very carefully. Mr. A is a doctor and running a hospital. So whatever income he is earning from the hospital, is it a he will be treated as a profession for that income, professional or a businessman? That is a very good question. Answer me this. Okay, I'm waiting for your answer. If there's a doctor who is the owner of an hospital, who is running an hospital and getting income from that hospital, then that income will be treated as his professional receipt or a business receipt. That hospital will be termed as what? A business or a profession. So if you are giving me answer, write down like this: hospital dash business or profession. Keshav is saying, as it is running a hospital, is a business. Well done, Keshav. High five from Wi-Fi. Correct. If somebody is running a hospital, whether he's a doctor or not a doctor, that is a business. So, because if somebody is providing services on behalf of his profession, then it's a professional. But if somebody is running a hospital can be run by me also. There is no requirement to be the owner of an hospital. So you have to be a doctor. That is no requirement to be the owner of a hospital. Anybody can be a owner of an hospital, whether you are a doctor or not. So hospital is a business. If I am running a school, that is also technically a business. So there is a basic difference between a business or a profession, but under income tax, we need to calculate the profit or income under the head of PGBP. There is no difference in that. Thus, a painter, a sculptor, an author, an auditor, a lawyer, a doctor, an architect, and even an astrologer are a person who can be said to be carrying on a profession, but not business. However, it is not material whether a person is carrying on a business or profession or vocation, since for the purpose of assessment, profit from all those sources are treated as taxed alike. So under income tax, to calculate the income under this head, there is no difference. The provisions are same for either you are running a profession or you are running a business. So just for your knowledge, we were discussing that what is the difference between a business or a profession. Business necessarily means a continuous exercise of an activity. Nevertheless, profit from a single venture in the nature of trade may also be treated as business. So generally, business means continuing activity, but it does not mean that single activity will not constitute as a business. No, it will not. So for example, if I open a shop today of ready-made garments, and after 1 day of running business, I closed it. So even for a single day, I run a business. So for a single day, that income will be taxable under that PGBP. It will be treated as a business. Clear? I hope it's clear. It's a general meaning. Now, meaning of profits. Before reading this concept, now let me discuss you with a very important provision regarding the PGBP. Let me tell you how to calculate this profit under this act. So you will be a overview that whatever provision we are discussing, why we are discussing. When I will discuss the provision regarding depreciation, when I will discuss the provision regarding rental expenditure, the insurance premium paid, etc., one by one. So when I will discuss it, you might be confused that why I am discussing this. What is the need? What is the relevance of these provision? What we are discussing? We just discussed the meaning of business and profession. But why and how we need to calculate these income, this income under this ad? Let me tell you or share you very interesting things. So the provision, what we are going to discuss, you will understand why we are discussing these provision. So as you have understand the provision regarding salary. So there is a specific format of calculating salary income, like first of all, basic salary, then advanced salary, if it's in the question, then arrear of salary, then different kind of allowances taxable value, then different kind of perquisite taxable value, then there's a gross salary, then there will be deduction like standard deduction and that professional tax reduction sort of. Then we will find out the net salary or salary chargeable to tax or salary which is called taxable salary. This is the format of salary you have already understood. Then income from house property. Recently, you have gone through the provisions of income from house property. Then we need to calculate the GAV. There is a separate concept to calculate the GAV like municipal value, then fair rent, then standard rent, etc. So after GAV, we deduct the municipal taxes. Then we'll get annual value, then 30% standard deduction, then interest provision, like current year interest and 1/5 of pre-construction period interest. So when you calculating the current year interest or 1/5 of pre-construction period interest, so you know why we are calculating, because we need to deduct it from here. If we are calculating taxable value of a perquisite, why we are calculating? Because we need to put it over here. In the same way, there is a format of calculating PGBP, and that is what I am going to discuss you before going through the provision. So under PGBP, what we need to do for the purpose of a business or profession, generally, two trading and profit and loss account need to maintain. Generally, a businessman need to maintain two types of trading and profit and loss account. We need not to go to the balance sheet part, because under income from PGBP, we just need to calculate the net profit. So trading and profit and loss account, one as per accounts provision. We need to calculate the profit as per accounting provision. Clear? And one we need to calculate as per income tax provision. We need to calculate trading and profit and loss account, or we need to find out the net profit, as per income tax. So in the question, this trading and profit and loss account will be already provided. You need not to calculate trading and profit and loss account. You need not to maintain trading and profit and loss account as per accounting provision. This is going to be provided in the question already. That means net profit as per accounts will be given in question. So this part, we can say this is part A, and this is net profit as per accounting provision. This is going to be provided in the question. And we need to calculate this net profit as per income tax. How in the examination question will be provided? This, a profit and loss account will be given in your question already. There will be things like buy, sale, that will be a proper trading and profit and loss account will be given in the question itself. And the net profit as per accounting will be provided in the question. So we will be there buy, sale, buy, closing stock. We all know these terms. So that's a good thing in this head. Buy interest from bank. These kinds of information, these kinds of income will be provided. Buy gifts. Buy dividend. Buy rent received, etc. So income will be provided in the credit side of the trading and P&L account as per accounting provision. Understood? These are as per accounting provision. And of course, the debit side having the opening stock, to purchases, to direct expense, to salary, to outstanding commission, to rent paid, to penalty, provision for bad debts, to reserve. These are terms which we generally show in the debit side of the profit or trading and profit and loss account under accounting, of course. To expense on which TDS not deducted. Then at last to depreciation as per account provision, and then last net profit. Fine. So this will be net profit after deducting these expenses out of these income. So that is net profit as per accounts. And let me tell you, this whole performa, this whole detail will be provided in the question. And the examiner or the question will ask, now calculate net profit as per income tax provision. They will be giving you the trading and profit and loss account and the profit as per accounting provision. And will ask that calculate net profit as per income tax provision. So this is our solution part, what we are going to discuss in part B. So this is our question part. The part is, that means in question, these information will be already given. And now what we need to, this is the format of solution, what we are discussing. As I have just discussed the format of salary, that basic salary, perquisite allowances. In the same way, now this is the format of calculating PGBP income. So what we need to do, we need to take the net profit as per accounts provision, which has been given in part A. Net profit as per account provision. That means I am talking about this value. So whatever net profit as per accounting provision has been given in question, you need to take that net profit to solve this question first. So first step is net profit as per accounting provision, whatever amount it over here, that is need to be taken. For example, whatever it is, let's say it is 15 lakh, it comes 15 lakh. So I have to write it down, net profit as per accounting provision, 15 lakh rupees. Clear? There may be some additional information also. Except these plus minus, there might be some additional information also. Like it can be given in question, the additional information, point number 1 after P&L, that is also be provided in the question, that closing stock overvalued by 1 lakh rupees. That will be given in question. So do not worry, everything will be given in question. We just need to know the provision. We will implement that and we will find out the solution. So that is given in question. That also can be given sale rupees 2 lakh not shown in sale under trading. So that means stock is valued by more than 1 lakh rupees and 2 lakh rupees sale has not been shown under this sale. So these are 2 points regarding which we have additional information also. So we need to solve it one by one. So now the solution process says those income, first of all, we will always solve the credit side because it is easy to solve. So now those income or the credit side having those receipt which does not form part of business head, which does not form part of business head and form part of some other head of income, should not be the part of my 15 lakh rupees income. So that means, does sale is the part of business? Yes. So this sale effect already included in this net profit. So it will remain 15 lakh rupees. We will not do anything of this sale. We will do the additional information of sale later. First of all, we need to solve the P&L or trading part points. So sale is the part of business? Yes. So we will not do any adjustment in our 15 lakh rupees. Is closing stock is the part of business? Yes. It is also a part of our business activity. So we will not do anything regarding this closing stock also. But interest is a part of income from other source. We will discuss this chapter. PGBP, capital gain and income from other source. So under income from other source, it has been said that interest income will form part of income from other source. But under this trading and P&L, we showed this interest under PGBP head, which is wrong as per income tax provision. Accounts add every receipt under business provision. But as per income tax, we have a separate head for interest income. So this income should not form part of my business income. But because under account, it has been shown in the credit side. That means the effect of this income is included in 15 lakh rupees. So to remove the effect of this income, what should I do? For example, it is 20,000 rupees. And it is also the part of 15 lakh rupees. So I have to remove, under income tax, I have to remove this income from my 15 lakh rupees profit. So what I need to do, I need to deduct this interest out of my net profit. That is 20,000 rupees. Because why we are doing this? Because interest is not my PGBP head part. It is my income from other source part. In the same way, gifts is part of income from other source. So this gift value, whatever will be given in question, that is also going to be deducted. Dividend also the part of income from other sources. So we will deduct dividend also. Whatever amount is given, we will deduct, reduce it from this 15 lakh value. And of course, the rent, you recently gone through the provision regarding rental income. That is a part of income from house property. It cannot be shown under PGBP head under income tax. So this rental income also going to be deducted from this 15 lakh rupees. So from the credit side, whatever income which do not form part of our business head need to be deducted just like that. It's just an addition and deduction concept, that's it. In my opinion, PGBP head is very simple. either you need to deduct any amount, either you need to add any amount, or either you need to not do anything. Like sale value, we did not do anything with sale, we did not do anything with closing stock. So either you need to add something, either you need to deduct something, or either you need not to do anything of some amount. This is the format. It is not as difficult as the salary head. You have to calculate gratuity yourself. You have to understand gratuity 3 cases. If you are receiving from government, or payment of gratuity act, or not payment of gratuity act, or pension provision, or leave encashment, or car perquisite, or rent-free house. No, you just need to add some amount or deduct, or you need not to do so. It's not that simple, but basic concept is very easy under PGBP. So we have done with the credit side concept. Now come with the debit side concept, what we need to do. Now debit side, we need to see what expenses should not form part under income tax. So those expenses that should not form part under income tax, we need to remove that. We need to remove the effect of that expenses out of this 15 lakh rupees net worth. So opening stock is the part of business? Yes. Purchase the part of asset business? Yes. Direct expense a part of business? Yes. Salary is the part of business? Yes. Outstanding commission. Outstanding commission does not treat it as business expenses under PGBP, under income tax. Now you might be thinking, how would you know that this expense or this income will not form part of PGBP? So these are the provision we are going to discuss. When we will discussing the notes, then there will be written, there is a concept which says, there is a provision which says that outstanding commission will not be allowed as expenses under income tax. So I have already read those provisions. So I knew this thing, that outstanding commission does not form part of income tax expense. And how you will come to know this, I will teach you. So outstanding commission does not form part of expense. This is written in the provision in the notes. So that's what I'm saying. See, what we need to read from those notes, we need to understand what expenses will not be treated as expenses, what income will not be treated as income. And those expense or income, we just need to plus or minus. So I have already know the provision regarding this outstanding commission. So I know this is going to be add. So any expense which should not be the part of income tax expense is going to add. Any income side which should not be the part of business income should be reduced. Any expenses which should not be the part of expense under income tax is going to be add. It's simple mathematics, plus minus. Rent paid for business will form part of business expense. Rent received is not part of business, but rent paid for business is a part of business expense. So we do not do anything with this. No penalty is allowed under income tax for violation of law. So penalty for violation of law is not allowed. So that is also going to be add. Now, how I know this thing? Because I have already read those provisions. And when we will be discussing those provisions, you will see there will be a point which will say this, that penalty for violation of law will not be allowed. So that's why I am going to add this. Provision. No provision also going to be allowed under income tax. So all the provisions and as well as reserves is not going to be treated as income tax expense. So not even the provision, not reserve is going to be the part of my business expenditure. So all those expenses which have been shown in the debit side of an accounting, trading and profit and loss account. And if those are not allowed as per income tax provision, not allowed means those are not accepted as an expenditure, need to add back. The expense on which TDS not deducted. That is also a concept under income tax which says that if TDS is not deducted, then that expense is going to be add also. So these expenses, it's not form part of my business expenses. So I have add these expenses. And these incomes are not part of my PGBP head. So I have already going to deduct these income from my profit. Now two adjustment left. One is closing stock and one is regarding sale. It says closing stock overvalued by 1 lakh rupees. Closing stock overvalued by 1 lakh rupees. So this is a wrong thing which has been done in this, that we wrongly overvalued the stock by 1 lakh and we need to correct it. So how we need to correct it? If we overvalued stock under this 15 lakh rupees net profit by 1 lakh. So to correct it under income tax, what we need to do? We need to deduct this 1 lakh rupees overvaluation. I do not have space down, so I am writing over there. You need to deduct this overvaluation of stock of rupees 1 lakh out of this 15 lakh again. So if anything which is overvalued or undervalued, we need to adjust that also. And 2 lakh rupees sale has not been shown under this sale. So sale is undervalued by 2 lakh under this trading in profit and loss account, and closing stock is overvalued. So to correct the closing stock, we deduct 1 lakh rupees, and because sale is undervalued, so we need to add this sale value of 2 lakh rupees. So after this all plus minus, what we will get? The correct net profit as per income tax. And that is going to be my answer. Understood? What we need to do? The trading in profit and loss account as per accounting provision will be given in question. So we just need to take this net profit as per accounting provision, and now we need to check this whole trading in profit and loss account. So those incomes which should not be the part of my business should be deducted from this profit. It's simple mathematics, And those expenses which should not part of my business expenditure should be add back. How you will come to know that outstanding commission should be add back? How you will come to know rent should be add back? How you will come to know penalty, provision, reserve should be add back? These are the provision we are going to study from the notes. So once you will completely understood the provision of PGBP, all these things have been written in the provision that penalty should be add back, outstanding commission should be add back, provision should be add back. So these are the things which we are going to study. So when I will teach you that outstanding commission should be add back, so you should now understand where it should be add back and why. So if I am teaching you that penalty for violation of law is not allowed, so now you will understand, because we already discussed the format. So now you will understand why I am teaching you, because you need to add that back. Understood? The provision should be add back. The reserve should be add back. TDS, if not deducted, tax deducted at source. Those certain expenses need to be add back. And if something is overvalued or undervalued, etc., if some additional information is given, that should also some effect on this profit. After these plus minus, you will get the net profit, and that is going to be your answer in your examination. And let me tell you, this plus minus is very easy in respect of salary head calculation or even house property head calculation. So once you go through all the provision, you will come to understand what should be part of PGBP expense, what should not be the part of PGBP expense. Then this whole process will be very easy. So we will take the net profit as per accounts provision. In short, if I am going to discuss with the accounts provision, then we need to deduct disallowed income. In general term, we say disallowed income. Disallowed income means those income which should not part of your PGBP. Like we discussed rent received, dividend income, etc. We need to add disallowed expenses. As we discussed, those penalty, the provisions, reserve, etc. So we need to deduct disallowed income. We need to add disallowed expenses. And if any other adjustment is given, like undervaluation or valuation, it might have effect of plus or minus, depend upon the circumstances. And this will be my profit. That will be my answer for your examination. So this is the short format we just discussed. In the last page, I have told you how to calculate this plus minus. So when we are discussing the provision, one more thing which we just left over there. The last point was the depreciation as per profit and loss account. The depreciation as per accounting provision. Again, the depreciation given in the trading and profit and loss account will be as per accounting provision. And we need to calculate depreciation as per income tax provision. So, in this net profit, because I do not have place over here, when we discuss the provision, we need to add depreciation as per accounting provision. Always, it's a universal thing you need to do. Accounting provision depreciation will be given in question. You need to add this. And we need to deduct depreciation as per income tax provision. There's a different concept to calculate. There's a different concept to calculate depreciation under income tax. So, when in question under trading and P&L account, depreciation as per accounting provision has been given, you need to add that always, because that is as per accounting provision, and we need to deduct the depreciation as per income tax provision. So whatever depreciation has been given as per accounting provision, we need to add back. For example, if it is 2 lakh rupees, we need to add 2 lakh rupees under this net profit as per accounting provision. And there is separate provision. We will discuss the separate provision to calculate depreciation under income tax. And as per those provision, we need to calculate separate depreciation as per income tax. For example, it might come 1,85,000. Then we add the depreciation as per accounting provision, and we need to deduct the depreciation as per income tax provision. That is 1,85,000. One advice from my side, what generally student does, they say 2 lakh rupees as per accounting provision and 1,85,000 as per depreciation, as per income tax provision. So they add only 15,000, the difference between two. The answer will come the same, but it's my advice, don't do this. Kindly add the whole value, 2 lakh rupees as per accounting provision, and deduct as per income tax provision. That will be a good thing to apply the provision like this, because the examiner will see that yes, you know how, what is the exact format is. So don't use the shortcut. So please always do this, add the whole depreciation as per accounting and deduct the depreciation as per income tax provision. Now moving on to the provision, our notes sheet. So when now we will discuss the provision of depreciation, you will understand why we are discussing it. Because we need to calculate depreciation as per income tax provision. So because we need to add the accounting provision in the format, and we need to deduct the income tax provision depreciation from the format. That's why we are discussing, or we are going to discussing, the depreciation provision. I hope understood. Now let me take the queries. Let's see what students want to ask. Okay. Okay, so Bhumika, okay, business, that's done. Jitendra Chaudhary, CA firm with partner, business or profession. A CA firm is a professional firm, of course, and if you are a partner, you are a professional. Okay. tuition is a profession, sir? No, tuition is a business income technically, because to teach something, we do not need to own some specific knowledge. That can be provided by anyone. So tuition technically, if there's a coaching center, there's a tuition, then technically it's a business. Mr. Darshan is asking, in reality, all business will be maintaining both these profit and loss accounts, sir. In reality, if we are a small business, we are not a company. For company, it's mandatory to maintain two kinds of trading and balance sheet, etc., as per Companies Act provision, as per income tax. So if you are a small business, then you can directly maintain the accounts as per income tax provision directly, because you need not to maintain any tax as per accounting provision. So it's beneficial if you going to calculate the profit as per income tax provision for a small business, then it will be really beneficial for you, because you need not to calculate twice. But this information is not, the calculation is not that difficult, Darshan. If you'll see, if you have proper trading and profit and loss account as per accounting provision, then that there's some deduction and some deduction. For a small business, there is only some addition and some deduction, and you will find out your profit as per income tax provision also. Because there are some software like Tally, etc., they do not calculate profit as per your income tax provision. So if you are maintaining that, you are technically maintaining accounts as per accounting provision. And for income tax, you need to follow that PGBP chapter addition and deduction concept also. So it depends upon business on business. Okay, Mr. Keshav Goyal asking, sir, why sale of 2 lakh are not deducted from net profit? Keshav, in the example, the net profit was 15 lakh rupees, and we actually forgot to include 2 lakh rupees sale in this 15 lakh rupees net profit. So if we will add this 2 lakh rupees sale, the profit will increase. We should not deduct the sale, because the sale is undervalued by 2 lakh rupees. So to correct it, what we need to do, we need to add that sale. Okay. And it's just a mathematics. I am telling you, PGBP is very simple. Once you will go through the provision, once you will understand what need to be added, what need not to be added, what income should form part of PGBP, what income should not form part of PGBP, then it's just a deduction and deduction. That's it. It's as simple as that. I always believe that this is one of the most easiest head in comparison to salary and capital gain. Yes, house property is more easy, other sources easy, but these three huge heads like capital gain, PGBP, and salary, I personally believe PGBP is simplest. Darshan, now it feels like this chapter seems to be easier. It's very easy. Just trust me, be with me, follow what I am saying. I am in teaching from last almost 20 years, fine. So just relax. I know what is the exact students are exactly thinking. So the format I told you, just I want to clarify this thing, but how or what we should do, the provision I'm going to teach you, like depreciation as per income tax. So now when I will teach you the depreciation as per income tax, you know why we are discussing it, because we need to add the accounts depreciation and we need to deduct the income tax depreciation. Okay. Vaishali Bindal is asking, sir, bad debts included or not? Provision for bad debts is not allowed. That is going to be added back. But if bad debt is written off, that is a expense. Just relax. The provision regarding bad debt, etc., everything will be discussed. Just stay with me. We will discuss each and every topic one by one. So don't go fast. Just stay with me. I will tell you each and everything. A creditor's income is salary, income of profession, depends on his contract. If BCCI is paying, technically BCCI, the creditors are employee of BCCI technically. So if they are paying in the form of employer-employee nature, then it will be a salary. If there is a freelancer creditor who goes into the matches and play and take the fees, then it can be a professional or business income. Technically a professional income. Or we can say it depends upon the circumstances. So if you are on payroll, that will be your salary income. If you are freelancing, that will be a business or professional income. Prem Kumar is asking, why do we not consider depreciation as per P? And what is P? Prem Kumar, please write it completely, so I'll answer it, of course. Kriti, sir, a teacher doing tuition also come under business or profession? There is no difference in calculation regarding the income under business or profession. Yes, if a teacher is teaching in a college or in a school and getting salary, that is an employee, that is salary income. But if a teacher is providing tuition, then that is his income from business or profession. Why do we not consider depreciation as per P? Prem Kumar, I'm asking what is the meaning of P? P, under income tax, there is separate provision, there is separate concept of calculating depreciation, and that is completely different as per the Companies Act or accounting provision. So that's why we need to calculate depreciation as per income tax provision. We cannot take the depreciation as per P&L account. Fine. Notes I have uploaded on the portal yesterday. Please go and find them. Fine. If you're not able to find, I'll upload it again. But I know. So anyone downloaded the notes? Some students are asking me that notes are not available on the portal. So I guess any one of you downloaded the notes. If yes, then please write me, because some students have some confusion regarding the notes. So like moving on to our notes now. Okay, so we were here, like meaning of profit, etc. So meaning of profit is just like the concept of income, which you must have gone through in your chapter 1. That is, income can be in cash or kind. We all know that income can be in cash or kind. Income includes capital receipt as per as revenue receipt, voluntary receipt also. Applicability is immaterial. Once you earn the income, then it is your income. The expenditure, the application is irrelevant. You must have gone through the application of income versus diversion of income concept, which is in chapter 1. Then legality of income is irrelevant. Income is going to be taxable, whether it's a legal business or illegal. That is also a part of nature of income concept in chapter 1. Distinct business says if a person has 5 businesses, then aggregate of that business is going to be taxable as his income. And computation of profit, how we need to calculate or compute the profit, that is also going to be discussed. One by one, we are discussing each thing, that is profit in cash or in kind. You can go through these provisions because these is kind of definition of income, which is technically in chapter 1. So profit may be realized in money or in money's worth. You must have gone through these provisions. Capital receipts are not generally to be taken into account while computing profit under this head. Generally, capital receipts does not form part of net profit, but there are some exceptions also. There are some compensation which is going to be taxable under PGBP head. We will discuss it under section 28. Voluntary receipt, payment voluntarily made by person who were under no obligation to pay anything. Like I am in a profession. I am a chartered accountant. I am a practicing chartered accountant, and I am providing services to my client. So if some clients comes to me and take my services of filing his income tax return, and I charge some money from it, then it is my business or professional income. But if somebody comes to me and pays voluntarily, without even providing services to him directly, even that is going to be my business or professional income. For example, if any CA provide consultancy via YouTube channel free to the public, and any viewer pay him fees due to the benefit of his advice, even when the viewer has no obligation to pay. So there is a free YouTube channel and I am providing consultancy, suppose, and not charging anything from anyone. But some client has some benefit due to my consultancy, and he comes to my office voluntarily and pays some fees to me, even when he does not have any legal obligation to pay, because I was providing my services free of cost. So that payment also going to the part of my business or profession income. Clear? You can read it. These are normal concept, normal provision. Application of the gains of trade is immaterial. It does not matter where you apply the receipt you have. Once you have receipt in the nature of business or profession, that is going to be taxable under this head. Legality of income, irrelevant. The legality of a business, that is also form part of chapter 1, income definition. The illegality of a business, profession, or vocation does not exempt its profit from tax. The revenue is not concerned with the taint. Taint means flaw, problem, okay, of illegality in the income of its source. Income from distinct business. The profit of each distinct business must be computed separately, but the tax chargeable under this section is not on the separate income of every distinct business, but on the aggregate. Okay, some students are saying notes are not available. If it is not available, do not worry. I'll upload it again after the class. So stay with me. Read out of these notes because I know I've uploaded it yesterday. I'll ask the concerned person that is it uploaded yet or not. If it is not, I will upload it after the class. Okay, so just do not worry. Stay with me. Focus what I am teaching. Computation of profit. Profit should be computed after deducting the losses. Technically, we are going to tax the net profit always. So income is not taxed on gross base, it's going to be taxed on net base. Net means we are going to deduct the expenses out of the income and then we will get the net profit and that is going to be taxable. Okay. Method of accounting, again, it's a theoretical concept. It says that income chargeable under the head profit and gains of business and income from other source shall be computed in accordance with either on the cash or mercantile system of accounting regularly employed by the system. Only these two heads have the option to tax the income on cash basis or mercantile system. All other heads income is going to be taxable either on due or received, whichever is earlier. You must have gone through the provision of salary. The salary is going to be taxable whether on received or due, whichever is earlier basis. The same is applicable on house property. The same is applicable on capital gain. But for business head and income from other source, you can maintain the accounting, you can pay the tax either on cash system or mercantile system. But there is two exception. Interest received by necessity on compensation or on enhanced compensation shall be taxed on receipt basis. This is the part of income from other source we will be discussing when I will teach you the income from other source provision. And the second point is any income referred to in section 224. That is assistance in the form of a subsidy or grant or cash. If any subsidy, grant or cash is received from government, etc. to any business, then that is also going to be taxable when it is received and not on due basis. We have the ICDS, that is Income Computation and Disclosure Standard. As we have accounting standards and accounts, we have now ICDS under income tax provision. There is a good news for you that these ICDS will be dealt with at final level. So that's a good news for you that we do not need to discuss the ICDS concept under intermediate level. This is going to be dealt at final level. So that's a very relaxed provision. You should thanks to your institute that these provisions are not at your intermediate level. Now we are coming to the charging section of PGBP head. Income chargeable under this section 28. Let me ask you a question. As you have already gone through the two heads provision, like salary and income from house property. So somebody tell me the charging section of salary and house property. I am waiting for your answer. Let's see how many of you is remember what is the charging section of. Let's make it more interesting. Tell me the charging section of income tax and charging section of salary and charging section of income from house property. Let's see how sincere you are. I am waiting for your answer. Send me the answer of charging section of income tax, salary, and income from house property. Fast. Charging section of income tax, I'm waiting. Charging section of salary and charging section of income from house property. PGBP charging section is 28. Okay, Prem Kumar is saying salary charging section 17. It's a wrong answer, Prem. Bhumika is saying salary charging section 10. That is also a wrong answer. Okay, keep trying, keep trying. Those are giving wrong answer. That's fine, but those are not giving answer. That's not fine. So you should participate in things. You should trust upon yourself. So give an answer at least. Fine. Not sit back and just enjoy this game. This is not a game. This is your life. This is your life. This is everything is just happening for you, for your benefit. So take it seriously. Okay. Diksha Agarwal is saying salary will be charged with. No, I am asking the charging section. As in PGBP charging section is 28, I am asking the charging section of income tax, the charging section of salary, and the charging section of income from house property. Okay, Vaishali Bindal is saying house property charging section is 22. Correct. Well done, Vaishali. Kavita is saying salary charging section is 15 and house property is 22. Well done. Very good. Rushita, salary 15, house property 22. Well done. Correct. Gunapali Prasanna, section 4, section 15, salary, section 22, income from house property. High five, say high five. Well done. Correct. The charging section of income tax is section 4. The charging section of salary is 15. And the charging section of house property is 22. And the charging section of PGP is 28. The capital gain charging section we will be discussing, that is 45. The income from other sources section 56. So we will discuss regarding that. But charging section of income tax of PGBP is section 28. So it will tell, it will explain, it will going to tell us that what kind of income will form part of PGBP head. So in a summary, we can say those income which are covered or which are related to our business or profession will form part of our PGBP head. But there are certain special provision also. So let's discuss one by one. Okay, Krati is also giving the correct answer. Arshita is also giving the correct answer. Very well done. Charging section. Who is this? Miss Kana Gatrat. I hope I am pronouncing it correct. Charging section of income tax is 10. It's wrong. Bhumika is 80C or 80CCD. What is this 80CCD? That's a deduction. That is not a charging section, Bhumika. Okay. Krati is saying income from salary charging section is 20. Wrong. It's 15. Sushil Kumar is asking, what is your question, please? Again, sir, that is what I was asking. Do not ask. This is question. You can scroll back the video and you can listen what I just asked Sushil. So it's a humble request to all of you. Please do not ask this, that, sir. Please repeat again, because we are on a YouTube channel. You can scroll back and listen as many times as you want, whatever you want, whenever you want. Okay. Okay. Salary 15. Pramod Veeris, good morning, sir. Capital gain and other source chapter. Whether you will teach? Yes, I will teach you PGBP. I will teach you capital gain. I will teach you income from other sources. Okay. So now moving on to section 28, it says income from business or profession. We already knew this thing. Income arising to any person by way of profit and gains from the business or profession carried on by at any time during the previous year. Second point, that is under profits, there was a point which says capital receipt generally does not form part of PGBP. And I told you that in certain circumstances, there are some exceptions. There are some cases in which capital receipt will form a part of your PGBP. So second point is actually talking about this, that any compensation or other payment due to or received by. Point number A, B, C, and D. All 4 points talk about the same thing. That if there is any modification or termination of any contract with an agent, with a person managing the business, etc., then that compensation will be one time. It's kind of a capital receipt, will form of PGBP income of that person. like any compensation or other payments due to or received by any person by whatever name called, managing the whole or substantially the whole of the affairs of an Indian company or the affairs in India of any other company. So we are talking about the manager, CEO, etc. They are the person who technically managing the whole or substantially the whole of the company. So if they are getting any compensation regarding the termination of his management or modification of any terms and condition regarding his contract, then that compensation will be treated as his business income. It's very simple. Any modification, termination for any person who is technically managing the whole or substantially the whole of the affair of a company. In the same way, if there is any agency, any person by whatever name called, holding an agency in India for any part of activities relating to the business of any other person or in connection with the termination of the agency or the modification. For example, I am running an agency of Maruti company. Okay, Maruti Suzuki. So company have a contract with me that I can sell their car for next 5 years. And my agency will be the only distributor in a particular city for that company. Now the Maruti wants to open one more distributor or one more showroom in the same city. So they are technically modify my agency terms and conditions. And there was a clause in that agreement that if you change, terminate or modify the terms, then you need to pay some compensation to the agency. So that compensation will be my business receipt and will be taxable under my PGBP head. Clear? So these A, B, C, D all are same thing. They are talking about the modification and termination regarding the agreement with agency, with a person who is managing the company, etc. The same way, any person for in connection with vesting in the government or any corporation owned or controlled by the government under any law for the time being in force of the management of any property or business. Again, as specified, any person by whatever name called or in connection with the termination or modification of the terms and condition of any contract relating to business. In the same way, if I have a contract with my buyer or seller, and in the contract it has been written that there are certain terms and conditions, and if we terminate that contract or modify, then some compensation need to be paid. And if somebody is modify or terminate that, then that compensation will form part of my business income. So that ABCD, all 4 points talk about the same thing. Income from some specific services performed for its member by a trade, profession, or etc. If there is any chamber of commerce, etc., there is any profession which actually performs some specific service to its member, then also that is going to be taxable as a part of their business income. Incentive received or received by SSE carrying on export business. So if you are doing an export business, government technically promote the export business. Government want that people should export, because in that case we will get the foreign currency and that will actually going to boost our economy. So government provide various benefits if you are doing export. So incentive received or receivable by SSE carrying on export business will form part of your PGBP. First, profit on sale of import entitlements, profit on sale of a license granted under the Import Act 1947. So if you are selling your import license, the profit arising on that license is going to be taxable under PGBP. Second is cash assistance. As I told you, government give the benefit on export. So government launched a scheme that if someone export 100 crore rupees product out of India, then we will provide him cash assistance. It's a kind of a price, cash assistance of rupees 50 lakh rupees. And suppose I have done that. I have exported 100 crore rupees merchandise or goods out of my country this year. And government is paying me 50 lakh rupees. So that 50 lakh is going to be the part of my business receipt and going to be taxable. In the same way, custom duty or excise duty repaid or repayable as drawback. So if I paid any custom duty on import, etc. On import, we need to pay duty. Export is technically duty free, but import is technically dutiable. If you import some article, that is dutiable. If you manufacture, then you need to pay excise duty or GST, etc. So if we import some article into India and pay import duty of say 1 lakh rupees, it's a part of indirect tax. And after some manufacture, we again export that article. Understood? We import, for example, we import these calculator, fine. And we pay duty of rupees 1 lakh, import duty on import of these calculator, clear? And after some modification in this calculator or branding, etc., we export these calculators out of India. So now government say, because you export this thing, then that means you will get the foreign currency into India. So whatever import duty you have paid, we will refund that import duty to you, and that is called duty drawback. The word itself explaining that whatever duty you have paid, government will repay it to you. So 1 lakh rupees I have paid on import of these calculators, and if I export them again and fulfill certain condition, then that 1 lakh rupees can be given back by the government to me, and that is called duty drawback. So that 1 lakh rupees will be my business income. So what must have been happened over there? When I have import that, then I am paid import duty. That will be part of my trading and P&L expense side, 1 lakh rupees. That is my expense. And if I export these articles, then I will get a certain amount of duty drawback, which can be 98%, etc. Suppose we will get 98% as duty drawback. So that will be from my PGBP income. So whatever I paid, that will be my expense part. And if I'll get it, receive again, that is my duty drawback, and that will form my PGBP credit side. That means from part of my business income as duty drawback. Okay. Next, custom duty or excise duty that we have discussed. Profit on transfer of duty entitlement passbook scheme or duty free replacement certificate. Again, it's like point number 8, which is regarding the profit on sale of import license. So if you are getting any profit on transfer of duty entitlement passbook, that is also going to be a part of our business income. Point number 5, value of any benefit or perquisite. The value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of any profession. Let me tell you this whole section 28 in a very simple language. If you are getting anything for doing business or profession, or for not doing business or profession, listen it very carefully. If you are getting anything from doing business or professional activity, or from not doing any business or professional activity, that is your business. This is a very interesting thing when I'm saying that for not doing any business activity, how you can earn by not doing any business activity, I'll explain in the later points. It will come in this topic, section 28. But for the time being, you should understand that any income which arises due to any business or profession activity, directly, indirectly, or any income arise due to not carrying on any business or professional activity, directly, indirectly, that will form part of your PGBP under section 28 income. Okay. Value of any benefit or perquisite, it's a very simple point. It says, for example, I am running an agency of a cement company. And it says, if I sell that particular brand company cement of 10 crore rupees in a year, they will give me a car. The company will give me a car to my business if I'll going to sell their brand 10 crore rupees or more value. And I had done that. So the company is going to give me a car. So the value of that car, the fair market value of that car, that is also going to be treated as my business income. So I told you, you get that car Why? Because the business activity. So anything which you will get as due to business or profession, that's going to be form part of your business income. So the market value of that car is going to be your business income. So it can be a perquisite, it can be a benefit, it can be monetary, it can be non-monetary, but if it is due to business or profession, that is going to be taxable. For example, if I am providing services of a CA and my client paid me money, that is part of my income. Or if some client paid me in kind, for example, I have done some work for my client and he has paid a watch to me. So that watch is technically going to my business receipt, and whatever is the fair market value of that watch, that is going to be the part of my professional receipt and part of my net profit, of course. Next is regarding partnership provision. It says salary due to or received by a partner of a firm. You have must gone through the provision of salary head in which there must be an employer-employee relationship to form any payment or to taxable any payment under salary head. But a partner or firm does not have that relation. A partner or firm does not have employer-employee relationship because partner technically the owner of the partnership. So they do not have any order or obey relationship. That must have taught by the faculty that there should be a employer-employee relationship. What is the character of employer-employee? That employer is the master and employee is the servant. What is the relation of a master and servant? It says one should order and other should obey. So if there is any relation when there's someone who needs to order you and you just need to follow that, that is called an employer-employee relationship. So under partnership firm, there is no employer, there is no master because they are the owner of that firm. So under partnership firm, if you are getting any salary from firm, that's technically not a salary. So that is not going to be taxable under salary head. That is going to be taxable under PGBP head. So any interest, salary, bonus, commission, remuneration by whatever name called due to or received by a partner of a firm from such firm will be deemed to be income from business. However, where any interest, salary, bonus, commission, remuneration by whatever name called or any part thereof has not been allowed as deduction. This line, however, you can skip it from however till end because that will going to be discussed under partnership firm provision, not under here. So you can learn from over here till this right now that any interest, bonus, commission, remuneration you are getting from a partnership firm will form of your PGBP part. From the sentence start from however where any interest, that is a separate provision that is going to be discussed when we will discuss the partnership firm provision. Not relevant, right? Suppose a firm pays, again this example you will not able to understand right now because that is connected with the partnership firm provision. You will be understand then when we will discuss the partnership provision. Any sum whether received or receivable in cash or kind under an agreement. So I just told you that any income you receive or earn for doing business or not doing business, both will form part of your PGBP income. So point number 7 is the example which will tell you when we receive income for not carrying on any business activity. Let me give you a very interesting example. For example, there is an halwai. You know all the meaning of halwai? The person who cooks samosa, etc., etc. So there's a halwai 1 and there's a halwai 2. Clear? So you can understand the catering if you don't know the Hindi, but in Hindi we call it halwai. Fine. So there is a halwai who's technically selling his product. Halwai 1 is selling his product, and that is a samosa, like a potato patty, of course, for 10 rupees. In front of his shop, another catering person, another halwai, open his shop and he starts selling this almost same samosa for rupees 8. Customers start going over here, of course, because he's cheap and selling same quality kind of samosa. Due to this competition, this halwai reduced the rate for 5 rupees. Now, he reduced the rate for 3 rupees. Now, due to this competition, they both suffering from loss. Technically, they both suffering loss. And who's getting the advantage? Who's getting the samosa? We are the customer. We are getting the samosa for 3 rupees only. So, halwai 1 gives an offer to halwai 2 that do one thing, you should close your business and I will pay you 5 lakh rupees for compensation. Now understand, this 5 lakh rupees, if received, if accepted by halwai 2, then this 5 lakh rupees is for carrying business or for not carrying business. Understand? This 5 lakh rupees, if accepted by halwai 2, then is it for carrying on business or for not carrying on business? Technically, it is for not carrying business, but because it's directly and indirectly connected to business, and whether you are receiving anything which is to carry business or not carry business will form part of your PGBP income. So this 5 lakh will form part of the halwai 2 business income. Or if there is second offer that you should close this business and you should open a medical shop, and I'll pay you 3 lakh rupees. Even that, if halwai 2 accepted this offer, then it is 3 lakh is going to be his PGBP income, not that medical shop, but again the halwai business PGBP. So if there is anything you receive for even not carrying any business, then again that is going to be your business income. So if there is, you are not going to share any know-how, patent, etc. Again, if somebody is paying you for not sharing any know-how, patent, etc., that is going to be form part of your business income. More technically, we can understand this like, if I have a shop, Bata Shoe Company in my city, if I have a showroom, there are 2 more shops who is selling the same brand in my city. So I give them an offer that please close this business and sell some other brand and I'll pay you 10 lakh rupees each. So you should stop selling these brand. You should stop using this brand, patent, trademark, knowledge, know-how, etc. And I'll pay you 10 lakh rupees. And if these shop accept this offer, again, this offer is for not carrying this business. So this 10 lakh is also going to be the part of their business income. I hope it is clear. Back to the notes. And 7th point is all about this thing. Any sum, whether received or receivable in cash or kind under an agreement for not carrying out any activity in relation to any business or profession. So any sum, whether it's, you can go through this. This is very simple provision. I have just give you the example and the concept for not sharing any know-how, patent, copyright, trademark, license, franchisee, or any other business, commercial right, etc. Okay. Any sum received under a keyman insurance policy that must have been you must have been gone through regarding the keyman insurance policy provision under salary head, I guess. So if any employer received any compensation under a keyman insurance policy, that is going to be taxable under his PGBP head. Fair market value of inventory on its conversion treatment as capital asset. So if you have a inventory, that means stock, and you converting your stock into the capital asset, in that case, its market value will be treated as your business income. So we will discuss this provision in the capital gain chapter. We will discuss, when we will discuss the capital gain, you will understand what we are talking about. Section 35 AD, again, there is a separate provision regarding section 35 AD asset. So if you have a section 35 AD asset, and that asset has been demolished, destroyed, discarded, etc., then in that case, any income received will also be form part of your PGBP. Some received on account of capital asset, referred section 35 AD. So we have a separate section of section 35 AD. You will come to understand what we are talking when we will discuss section 35 AD provision. For time being, we can read it like this: any sum received or receivable in cash or kind on account of any capital asset in respect of which whole of the expenditure of such capital asset has been allowed, being demolished, destroyed, discarded. So do not bother what is section 35AD. You will understand when I'll teach you in this PGBP topic separately the section of 35AD. Moving on to the other concept, that is speculative business or non-speculative business. Non-speculative and speculative. Speculative business are those business in which we trade on any commodity, but there is no physical delivery of that commodity. We do trading regarding any commodity, but there is no physical delivery is involved regarding, like for example, if I'm in a shoe manufacturing business, so I take an order and I supply the shoes and I get the money. So in this, the commodity is shoes, but the physical delivery exists. So it's my non-speculative business. It's a normal trading business. But if there is any business in which there is no physical delivery, like the shares intraday trading via demat account. In an intraday share trading, what happened that we book shares and we sell it, and we have no intention to have the ownership of that share. So we do that in a same day. We book shares purchase in the morning, and before the closing of the day, we sold out it. So on the purchase, we do not take the physical delivery, and even in the sale, there is no physical delivery because share does not form part of my demat account. So that kind of intraday trading will be treated as speculative business income. The meaning of speculation is to forecasting. Like we can forecast that in a match, like Ashes is going on in a cricket match. For example, in a cricket match, India is playing against New Zealand. So people forecast that India will win or lose, etc., etc. That is called a betting. That is not a speculating, but we are forecasting the winning or losing. But that is not speculative business income because there is no commodity. There is only an event happening or not. That will it rain today or not? So if somebody is making money on these kind of bet, that's called betting. That's not part of my business income. That is a casual income, etc. concept. So that's the same thing we are doing upon regarding shares, that the share price will increase or decrease, and we are getting into an agreement to buy and sell, but without taking the physical delivery. In that case, that will be treated as speculative business income. So I have insert the provision regarding it, the summary also, and the example also. So generally, these business will not form part of speculative business. Hedging contracts in stock, hedging contract of raw material in which you save yourself from future risk. Trading in derivatives, future options, they are not speculative business. Forward contracts, again, not speculative business. Trading intraday via demat account regarding shares, that is a speculative business. You can search on Google, etc. more if you want to know about the speculation and non-speculation activities more. But I have written enough material for your understanding. Explanation 2 to section 20. After this speculation topic, I will take the queries, and then we will move on to the break, and then we will resume after 5 or 10 minutes. Okay. So explanation 2 to section 20, it specifically provides that where an assessee carry on a speculative business, that business of the assessee must be deemed as distinct and separate from any other business. Why we bifurcate speculative business from non-speculative? There's a reason. There's a concept that the losses from speculative business will be carried forward or set off only against speculative business. And the losses in non-speculative business have separate treatment. Now, what is this losses treatment? There is a chapter that is set off of losses. You will understand these losses concept, the speculative loss treatment, the non-speculative loss treatment. So just because speculative losses have different treatment than non-speculative losses, we need to bifurcate what activities is my speculative business and what activities is my non-speculative. Tax treatment are same. Tax applicability is same, but the losses treatment is different. That's why we need to differentiate. that whether some transaction is speculative nature or non-speculative. So in this become necessary because section 73, which relates to set of provision. Do not bother about it because there is a separate chapter which is going to be teach you by the faculties. So at that time, you will understand the treatment of speculative losses. For the time being, you should just understand that we need to show the speculative business separate and non-speculative separate. The speculative transaction definition over here in the PGBP head, charging section is 28. But all the definition relating to PGBP is under section 43. So the definition section for PGBP is section 43. If there is any definition that is been explained by section 43, clauses, subclauses, etc. So speculative transaction meaning, again, it is explained by section 43.5. It says means a transaction in which a contract for purchase or sale of, there must be a contract, legal contract for the purchase or sale of any commodity. You are technically purchasing or selling just like a normal trading, but without physical delivery. That is the difference. Including stocks and share is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or. So everything is normal in a speculative business. There is trading, there is contract, there is sale, there is purchase, there is money transfer, except one thing, there is no physical delivery involved. Okay. Where any part of the business of a company consists of the purchase and sale of the share of another company, such a company shall be deemed to be carrying on speculative business to the extent to which the business consists of the purchase and sale of such shares. So even if you are doing a single transaction of speculative nature, even a single transaction, that will constitute a separate business. The treatment, the profit and loss account, etc., will be calculated separately. However, the speculative provision does not applicable to the following company, the business of trading in share. If a company has its principal business, the main business is trading in shares, then its income from demat, etc., will not form part of speculative. That will be non-speculative business. The business of banking, or if you are in the business of granting of loan, etc., these three companies has been excluded from the speculative business definition. All the transactions done by these companies will be non-speculative. Transaction not deemed to be speculative, hedging contract. Now, what is hedging contract? You can go through these provision. Hedging contract in respect of raw material. Hedging contract generally to save yourself from the future prices ups and downs. So hedging contract still have goods delivery later on. So that is not a speculative business. So hedging contract in respect of raw material merchandise, not a speculative business. Hedging contract in respect of stock and share, not a hedging business, not a speculative business. Forward contract and trading in derivative, they are not speculative business. It seems like they are speculative because we are dealing in shares, etc. But no, these are not speculative business. You can read the meaning of eligible transactions. Trading in commodity in derivative, still they are not speculative business. Summary, I have made a simple summary for all of you to understand the meaning of speculative business with example. So you can read this, and there is an example also, speculative business meaning we have discussed above, and this is in a summary form in a simple language. Non-speculative meaning, and please go through this example. It's a very simple thing to make you understand. In the case of intraday trading in shares, intraday, that means we do not want to take the delivery of the goods. We are not going to purchase or sell it. We're not going to hold it. There is no actual delivery as the shares enter and exit from the trading account on the same date, and it does not enter the demat account at all. Dematerialization account, that is demat account, shares account, of course. Therefore, actual delivery does not take place. Hence, they are called speculative transaction. Therefore, based on the definition, it can be inferred that intraday trading income is speculative. So we have completed till the speculative provision. We have technically completed the basic provision regarding the PGBP. Basic. We discussed the section 28 charging section. We discussed the profit and business and profession difference. We discussed the calculation part. That is most important. What exactly we are doing in this chapter, the format. that we will be giving a net profit, a trading in profit and loss account, and the net profit as per accounting provision. And we have to convert that net profit as per accounting into the net profit as per income tax provision with the help of addition and subtraction. What we are going to add, what we are going to subtract, that is the whole process which we are going to discuss from now onwards. So profit and gains of business or profession, how to compute. Now from section 29, you will understand what expenses should not form part of our income tax profit and loss account. As I was adding outstanding commission, penalty, depreciation as per accounting provision, etc. So one by one from section 29 onwards, we will discussing those concepts. And with the help of these provision, you will understand that in the examination, which expense I should add back, which expense I should not add back. Which income should I add back or not add back? This is also we have discussed in section 28. Section 28 was telling that these income will form part of our business income. So any income which do not form part of section 28, that is going to be deducted as interest income, dividend income, rent income, etc. And the expenses, the debit side, will be discussed from section 29 onwards. Let's see if there is any query. Yes, Keshav is asking for break. Yes, Keshav, just a minute. Venkateshwaran is saying, hello, sir. I really attending your class for thanking very much for teaching amazingly, sir. I attended your class for November 22. It was really useful. So if I am helpful for anyone, that's my pleasure. I'm really thankful to you also. If I am helpful in your journey to becoming a chartered accountant, thank you, Venkatesh, for such nice appreciation. Diksha, in a case a person leaves a partnership firm and cash or kind receipt to not carry the similar business in locally. So in this case will be PGBP income. Yes, it can be a PGP income if it is if he is receiving it or not carrying any business activity, then yes, it can be his PGBP income. Correct. So what is the timing? What is the meaning of trading in derivative? Yes, this kind of question you should search on the portal because that is not part of our syllabus. So what is the derivative trading? You should go like future options, etc. You can go on Google, you can search what is the meaning of trading in derivative. You will get each and everything. So if I am going to explain the meaning of hedging, the meaning of derivative, the meaning of transaction in derivative, so I don't think so that we are able to cover this topic because we have almost 150 pages topic of PGBP. Can you hear me? It's almost 125 or 150 pages topic. So we have to cover in 5 lectures. And I am going to take every section. I'm not going to skip anything. So because I need to teach you each and every section which is relevant for your examination, so I need a little time for it. So this kind of query, I'm so sorry, Bhumika, I cannot explain it over here because it takes a lot of time. And time is money and we have short of time. So let's going for a break and we will resume our 5 minutes or 7 minutes short break. So you go have a tea, coffee, water, whatever you like, and I'll be back after 5 minutes. So Mr. Manish, can we take a break? Welcome back, everyone. So I hope you must have all your tea, coffee, etc. So moving on to our provisions. Let me see if there is any query, then let me answer it. Okay. Vaishali is asking, sir, employee gets lump sum money after leaving company for does not share information is PGBP? No. If employee is getting anything, that will be part of his salary income. That can be part of his salary income. Fine. Okay, next is a brokerage or commission received by any broker for speculative transaction is also a part of PGBP. Brokerage and commission is a business income. So if you are receiving commission on regular basis regarding anything, that is your normal business income. That will not be a speculative business. So if somebody is doing intraday transaction, so that can be his speculative income. But if somebody is receiving commission on that basis, that will be his normal business or professional income. Okay, Ms. Bhumika. Okay, let's move on to the notes. So as I told you that now we will discuss the expenses which is allowable under PGBP head under income tax. So if there is any expenses which does not allow, that means we should add back that in the profit which is given as per accounting provision. Okay. So section 29 is say, according to section 29, the profit and gains of any business or profession are to be computed in accordance with the provisions contained in section 30 to 43D. It must, however, be remembered that in addition to specific allowance, deduction stated in section 30 to 36, the Act further permits allowance of items of expense under the residuary section 37(1). So there is section 30 to 36. We will be discussing different expenses which can be claimed as deduction under certain section. And there is a specific sections also in which certain expenses will be allowed as deduction under certain circumstances. Okay. So we will be start from section 30. Computation of profit and gains from business or profession. As I've told you, we will take the net profit as per accounting provision. Then from section 30 to 37, those expenses which is allowable under income tax will be claimed out of that net profit. There are certain deductions which under section 40. Remember one thing, when we are using deduction word under PGBP head, it does not mean section 80C till 80U deduction as per chapter 6A. No. Deduction word also used under section 80C till section 80U. But for PGBP section, when we talk about the word deduction, that means the expenses of PGBP, trading account, P&L account. So these deduction word does not correlate with the deduction of section 80C to 80U. That's a different topic. Deduction means over here like expense. So admissible deduction, I can say admissible expenses. Inadmissible deduction, that means inadmissible expenses. That means disallowed expenses. Next is expenses or payment not deductible in certain circumstances. Profit chargeable to tax in section 41 and other provision. So we are going to discuss one by one these tabular format which is given. So first is admissible deduction under section 30 to 37. So we are going to discuss the section 30 till 37 first. First is, you can see rate, rent, rates, taxes, repair and insurance for building. So the good thing is I do not need to tell you what is the meaning of a building. So if there is a building, in short, I can explain it. If there is a building and if you are using it for your business, so there will be two circumstances. Either you will be the owner of that building or you are a tenant or lessee, etc. Fine. So if I am running my office in a building, so that building might be owned by me or it is on rent. So if I am running a factory, so that factory might be owned by me or that is on lease or rent, etc. I am a tenant or I am an owner. So if you are an owner, then in respect of that building, under trading and P&L account of income tax, we can claim insurance as an expense if we paid, rates and taxes like house tax, etc. if we are paying for that, and repair and renovation, which is of revenue nature. If it is a capital nature, then we can claim depreciation on it. So we can claim deduction. Deduction means as a revenue expenditure. So in respect of building, I can claim a deduction. That means as a revenue expenditure, any insurance paid by me, any rates, taxes paid by me, and repairs and renovation generally. If you are a tenant, then rent paid will be allowed as a deduction, of course. If insurance paid by tenant, then insurance expenses can be claimed by him as an expense. If rates, taxes, etc. paid by tenant, then that can be claimed by him as an expense. And if repairs and renovation done by him, then that repairs and renovation expenses can be claimed by him as an expense. It's a very general thing. Like we already know this thing. In respect of building, what we can claim in our P&L account. So generally rent, rates, taxes, insurance, and repair and renovation. If you are a tenant, then rent will be there. If you are not a tenant, then there will be no rent. Other insurance, rent, rate, etc. will be your expenses. Depreciation is for capital expenditure. So that will be discussed later. We are discussing what can be claimed as a deduction. That means as a revenue expenditure in respect of building. So even if it's a building or other asset like plant and machinery, furniture, etc., the same concept will applicable almost. Like if you are owner of that plant and machinery, etc., then insurance, rates, taxes, repairs, and renovation, if you have done on that plant and machinery, furniture, that can be claimed. If that plant and machinery and furniture is on rent, then rental value will be allowed as deduction. And if any insurance, repair, etc. paid by you, then that will also form part of your expenses. So this is general thing. You actually know these kind of provision. You are doing this in your accounting provisions, profit and loss account and balance sheet, etc. So there is nothing new regarding then asset provision except the depreciation, because the depreciation concept is completely different from the accounting provision. Okay, back to the notes. So these are the normal provision where the premises are occupied by assessee as a tenant. So in case of tenant, there will be one new thing, that is rent will be added. The rent paid for such premises and the amount paid on account of cost or repair if the assessee is undertaking to bear such repair of the premises. Occupation of premises by the assessee being the owner, there will be no rent. There can be rates, taxes, insurance premium, repairs, etc. Where the assessee himself is owner of the premise and occupies them for his business purpose, no notional rent would be allowed. No notional rent will be allowed under this section. However, where a firm runs his business in the premises owned by one of its partner, then we can pay the rent to the partner. In that case, rent can be allowed. The rent payable to the partner will be allowed, deduction to the extent it is reasonable. Okay. Repairs to whomsoever it will be bear, that person is going to claim that repair. So as an owner, if you bear the repairs, etc., you will claim it. If a tenant is bearing it, then he is going to claim it. Apart from rent, the section allowed deduction in respect of expenses incurred on account of repair to building. If the assessee is the owner, if the assessee is a tenant who is undertaking to bear the cost of repair, even if the assessee occupies the premises, otherwise then as a tenant or the owner, the lessee, licensee, mortgagee with possession, he is entitled to a deduction under the section in respect of current repair to the premises. It's simple, you can read it. If there is any issue, any problem, you can ask me in this lecture or next lecture. I am here for next level lecture. Okay. Now, cost of repairs and current repairs of capital nature not to be allowed as deduction, because it is going to be allowed as a depreciation, not as a deduction. So amount paid, you all know that a capital expenditure, we need to claim depreciation. So of course, that is not as a revenue expenditure. When you use the word deduction, that means we are using it as a revenue expenditure. So amount paid on account of the cost of repairs to the premises occupied by the assessee as a tenant, and the amount paid on account of current repairs to the premises occupied by assessee otherwise than as a tenant shall not include any capital expenditure. It's very simple. Any other expenses like municipal tax, etc., if paid by owner, he will claim it. If paid by tenant, he will claim it. Premises used partly for business. If you are using the premises partly for business, partly for other purpose, then the proportionate expenses of repair, rent, insurance rates will be claimed as a business expense. There's nothing new. These are very simple provisions. Nothing. It's very simple. So the most important thing that you should have interest in this. If you are interested to become a chartered accountant, everything will be easy. Like it's a very interesting story which I told in every class. That once what happened, there was Albert Einstein. Albert Einstein, we all know that Albert Einstein is the greatest scientist of all time. So he said to his accountant, once he said to his accountant that the most difficult subject in this world is income tax. Imagine. Einstein was not able to understand the provision of income tax. And you are able to understand the provision of income tax. I am the teacher of income tax. So does it mean that we are more intelligent than Einstein? No. Not possible. Don't even think about it. No. We are not that intelligent. Because he was the greatest scientist of all time and he discovered a lot of things. He invented a lot of things. So, but he said, and it's a true thing. I'm not telling you a fiction story. It's a real story. He actually said to his accountant that income tax is the most difficult thing to understand. Now imagine why he said this. We are able to understand it, but he was not able to understand because he did not have any interest in income tax. He was interested in invention, science, those things. So he feels that thing is easy, even it is so difficult in comparison to income tax because he has interest in those things. He had no interest in income tax provision. That's why he feels it's difficult. It's a universal rule. You find only those things difficult in which you do not have any interest. And if you find interest in something, you find these things easy. I can prove this. If someone of you is a good dancer, he or she find dancing easy thing. But ask somebody who is not a good dancer, who does not know how to dance, like Mr. Dharmendra, his son Sunny Deol. You can ask them, and they always say the most difficult thing in this world is dancing because they do not have any interest in that, and you have interest in that. So if somebody asks, you want to go into the satsang for 2 hours, you have to sit in a satsang for 2 hours. You will find it very difficult. You will watch the time again and again, and you will feel 2 hours is so long because you do not have interest in that. But if somebody is going to ask you that you have to attend a party into a disco for 2 hours, you will find it so interesting and you will find that time just pass like this. So unless you have interest in the studies, in the subject, in your career, in your future, in this course, you will find everything is very difficult, whether it's income tax, whether it's accounts, whether it's audit, whether it's law, everything. If in any subject you have interest, you are finding it easy. Not in the CA course, from your nursery classes till now, you find those subjects easy in which you have interest. And you are technically finding those subjects very difficult if you do not have interest. We all have this kind of problem. We all, you, me, and everyone. Even Einstein was have that kind of problem. So you have to understand, then this is all about interest. You have to create your interest in your study. And once you have create interest in your any subject or in this course, you will find it not that difficult. So if you have interest in income tax, wow, we are going to learn something new. I will gain some knowledge and I can tell other people regarding that. So if you have that kind of interest in this subject or any subject, you'll automatically find this thing. Like for example, if I told you that I'm going to sing a song at the end of this class today, whatever song you want, I will sing it for you. So you will have interest. Wow, today we will have a song from the sir at the end of this class. So you will start waiting to end the class and you will be writing your favorite song that sir going to sing it. I'm not going to sing it, of course. But why? Because you just created interest in that thing. That is not in the case of study. If I'll say, okay, fine, we are going to discuss these topics. So you might thinking, oh my God, I have to understand these topics. I have to learn them. You have to learn it because of your future, for your future. If you'll be a chartered accountant, you will get everything what you want. Fine. So just try to create your interest in your study. I will tell you this also, that how you can create interest in your study. In our next session, next lecture, I will tell you that. So please be focused, be disciplined, and this is your future. This is your future, and you are the only one who can make it or break it. So just make it. Fine. So other expenses, I just told you that all kind of expenses regarding the building. If you are a tenant, if you are paying it, you can claim it. If you are an owner, if you are paying it, you can claim it as a revenue expenditure. The same provision is for repair and insurance of machinery, plant, and furniture. Okay, section 31 allows deduction in respect of the expense on current repairs and insurance of machinery, plant, and furniture in computing the income from business or profession. Uses of the asset. In order to claim this deduction, the asset must have been used for the purpose of assessee's own business, the profit of which are being taxed. General provision, you can read it. Even if the asset is used for a part of previous year, the assessee is entitled to the deduction of the full amount of expense on repair and insurance charges, and not merely an amount proportionate to the period of use. So if you are using an asset, like you have a generator and your electricity is gone only for 15 days in the whole year, still you can claim the deduction of full year on that generator. So the concept is to put to use for business, whether it's actually using or not, depending, but still you can claim the full deduction of depreciation. Repair exclude replacement or reconstruction, because replacement or reconstruction is in capital nature. So you can claim depreciation on that. So those kind of repair in which any replacement is coming or reconstruction is coming, that is technically capital nature. We cannot claim it as a revenue expenditure. We can claim depreciation on that. Okay. Insurance premium, the deduction allowable in respect of premium paid for insuring the machinery, plant, and furniture, you can claim it. Current repairs of capital nature, not to be allowed, of course. I've said you that capital nature, capital expenditure will be treated as depreciation purpose. So only revenue expenditure can be claimed under section 30 or 29 or 31. Amount paid on account of current repairs of machinery, plant, or furniture shall not include any capital expenditure. In other words, current repairs other than of capital expenditure is allowed as deduction in the computation of income under the head PGBP. Now the next and first important topic for the numerical purposes under PGBP is depreciation. I can tell you that whatever we have studied till now under PGBP head, they are general provision. General provision. We have discussed the meaning of business profession. That is not a numerical thing you can go through for the theoretical purpose, of course. We have discussed the profit term. That means income can be legal, illegal, cash, or kind, application. That is technically related to the definition of income also. Again, that is a part for your basic foundation for PGBP head. Again, it's not that important for numerical purpose. The numerical topic which was important is that format I told you, that what we need to do in this PGBP head. There will be a trading in P&L account. From that net profit, we need to find out the income tax net profit. That is the important numerical part till. After that, speculative, non-speculative, that is for your understanding only. You can read it out the provision. There is no difference in calculation of profit for speculation business or non-speculative. There is the treatment for carry forward and set off of losses. They have separate provision regarding speculative and non-speculative. So nothing to do with PGBP. Then we discuss the section 28, which says following income will form part of your PGBP. Like profit on sale of import license, duty drawback, any duty refund, compensation received by any person who is substantially the whole agency, any income received for doing business or not doing business, any specific services for any association, etc. So these were incomes which should form part of your profit and loss or trading credit side under income tax. And that is very easy. A normal profit and loss account question, there will be sale. It's going to be the part of your PGBP, closing stock, any discount, etc. connected with the business receipt, etc. etc. So that is section 20 is also for reading purpose to understand. Out of these provision, any theoretical or 2 or 3 marks question can be framed. Then we discussed about the provision regarding section 29, which talk about the provision for deductions in section 30 and 31. We discussed regarding building, in respect of building, what we can claim as deduction, and for plant and machinery, etc. That is also very simple. The first important numerical topic for PGBP is depreciation. So now focused. Now just be focused and understand this is the one of the most important provision. It can come as a separate numerical also for 3-4 marks, or it will be the part of your long question always. If there's a PGBP long question, the first compulsory question, generally in intermediate and final board, generally related to PGBP head. So depreciation will always be the part of that question, or depreciation numerical can be framed separately also for 2, 3 or 4 marks. For depreciation, I told you that the depreciation which is given in the question in the trading and profit and loss account is as per always accounting provision. So we need to add back the full amount of depreciation which is given in question, and we need to calculate depreciation as per income tax provision, what we are going to discuss now. So depreciation, we have a normal depreciation provision. We have point number 2, additional depreciation provision. We have depreciation allowance provision, and we have terminal depreciation provision. One by one, we will discuss each and everything. Okay, so now be focused, because now we are running into the first important numerical provision, that is depreciation. We all know the meaning of depreciation, of course. That's the good thing. I need not to tell you what is the meaning of depreciation. We all know that. The value which is diluted due to normal wear and tear in any asset, that is called technically a depreciation. Fine. Under income tax, calculation of depreciation is completely different from accounting provision. In accounting provision, we generally charge depreciation on SLM method and with the use of number of days. How many number of days you have to use the asset, for that proportion number of days, technically we charge depreciation. First of all, under income tax, depreciation will be charged on WDV method. There are rare cases in which SLM is allowed, like in power generating undertakings. We will come to that topic. First of all, understand there is a concept that is called block of asset concept. To claim depreciation, we charge depreciation not on separate asset under income tax. We charge it on block of asset case. So what is the meaning of block of asset? We will discuss. There is no proportionate number of days depreciation is going to be charged. Either depreciation will be charged for full year, or we can say with full rate of depreciation, or with half rate of depreciation, or there will be no depreciation. So either assets are going to be charged depreciation with no depreciation, or 50% of normal rate, or full rate of depreciation. So first thing, depreciation will be charged on block of an asset concept, WDV method, and the rate will be only 3. Either it's 0, 50% of normal rate, or full normal rate. When it will be 0, when it will be 50%, I will tell you. Section 32 allows a deduction in respect of depreciation resulting from the diminution or exhaustion in the value of certain capital assets. The explanation 5 to this section provides that deduction on account of depreciation shall be made compulsorily whether or not the assessee has claimed the deduction in computing his total income. Now, very interesting thing. Depreciation is mandatory. Whether you claimed it or not claimed it, depreciation is mandatory. What is the meaning of this? Let me explain you. For example, there is a block of asset. What is the meaning of block of asset? It's a combined value of all assets of a certain block having same rate of depreciation. What exactly means? I will explain it to you. You understand there is a block of asset in which the value of block is 10 lakh rupees. And the depreciation rate, for example, 10%. So if assessee charge depreciation 10%, that means 1 lakh rupees. So this debt can be claimed by assessee in his trading or profit and loss account, that is depreciation at 1 lakh as an expense. But even if assessee charge 1 lakh rupees depreciation, then for next year the value will be 9 lakh rupees as per WDV method, and depreciation for next year will be 90,000. Now this provision says if assessee does not claim this depreciation in his trading in profit and loss account, he does not want to claim it. Then if next year, if he wants to claim, then depreciation of 90,000 can be claimed. This 1 lakh will be lapsed because the provisions say claiming of depreciation is compulsory. So either you claimed it in your profit and loss account and reduce it net profit. But even if you do not want to claim, then it's your loss. Government will assume that depreciation deemed to have been allowed. So for next year, the value will be 9 lakh rupees, assuming that you have claimed it. So even if you are not actually claimed it, we will assume it as it deemed to be claimed by assessee. So for next year, you can only claim 90,000. For example, he does not claim in next year also 90,000. Then the remaining value, 8,10,000. So if he wants to claim depreciation in third year, then he can claim only 81,000. So that is the meaning of that mandatory provision, that you need to claim your depreciation mandatorily, even if you're not claiming it. Then government will assume it deemed to have been claimed, and the WDV for next year will be taken after that depreciation deemed to have been claimed. Okay. Condition to be satisfied for allowance of depreciation. The allowance of depreciation, which is regulated by rule number 5 of the Income Tax Rule 1962, is subject to the following conditions, which are cumulative in their application. All conditions should be fulfilled. The word is said cumulative. Okay. The assessee, the asset in respect of which depreciation is claimed must belong to either of the following categories. Either it should be a building, machinery, plant and furniture being tangible asset. Either it should be a tangible asset, or it should be, and of course, intangible asset. That is know-how, patent, copyright, trademark, license, franchisee, or any other business or commercial right of similar nature, being intangible asset on or after 1st April 1998. Not being goodwill of a business or profession. Goodwill of business or profession also an intangible asset, but that is not eligible for depreciation because we do not have a rate for it, or because it's a different kind of intangible asset. So know-how, patent, copyright, they are also intangible. You can claim. It's a kind of a license. If you can see know-how, patent, copyright, trademark, license, franchisee, they are technically or are a kind of a license. But goodwill of business or profession, it is not, it's an intangible asset. But it is not, it's a different nature. So you cannot claim depreciation on goodwill of a business or profession. The plant includes part of plant also, of course. Buildings includes roads, bridges, wells, tube wells, culverts, etc. Okay. The asset should be actually used. Of course, under PGBP head, you can claim depreciation if that asset is used for the purpose of business or profession. If you purchase any asset and does not open it, does not put to use it, then you cannot claim it as a deduction of depreciation by the assessee for the purpose of its business during the previous year. The asset should be actually used by the assessee for the purpose of its business. The asset must be put to use. Put to use. That means it should form part of your business activity. Whether it's actually utilized or not, it does not matter. But you should actually put to use it. Like fire extinguisher. If it is used in your factory, and as there is no fire during the previous year, we did not use it, but they put to use. But if those fire extinguisher in packed form, in the boxes, and you did not take out of the boxes, then will not be treated as put to use. So the asset should be put to use. That is mandatory condition to claim depreciation at any time during the previous year. The amount of depreciation allowance is not proportionate to the period of use during the previous year. Asset used for less than 180 days. As I have told you that under income tax, for example, if the rate of depreciation 10%, then in respect of that particular asset, either DAP will be claimed 0% or half of the normal rate, that means 5% or 10%. When it is going to be applicable 0%, when it is 5%, when it's 10%, it's a separate format I have made for you in a summary form after this section that I'll explain in detail, but for the time being, if asset is used then less than 180 days, then depreciation rate will be 5%. Even if it is for 1 day, only put to use for 1 day, then DAP rate will be 5%. If it is used more than equal to 180 days, then full DAP rate will be applicable. So there is no concept like proportionate number of days as in case of accounting provision. If you used your asset put to use for 25 days, then it will fall in second point. So we can claim 50% of normal rate depreciation. If it is used for more than 180 days, for example, it is used for 185 days, then you can claim full rate of depreciation. When it will be 5, 10, and 0, I will tell you next, explain in detail when we will cover this topic from the notes. So, however, it has been provided that where any asset is acquired by the assessee during the previous year and is put to use for the purpose of business or profession for a period of less than 180 days, depreciation shall be 50%. Okay. Depreciation would be allowed to the, of course, owner. If you are an owner only, then that case only you can claim the depreciation. If you are a tenant, you are a lessee, you cannot claim depreciation. So being owner is one of the main conditions to claim the depreciation also. Depreciation you can read the provision regarding the ownership. This you can read. It's a simple provision. You can go through it and read it. If there is any problem, I will discuss those problems. Use includes passive use in circumstances. One of the conditions for claim of depreciation is that the asset must be used for the purpose of business. Whether directly or indirectly does not matter. Like standby equipment and fire extinguishers can be capitalized if they are ready for use. I just told you. So if they are not directly utilized in manufacturing process, but if they are ready to put to use anytime, then that is also eligible for depreciation. This is my summary. I have made it for you to make you understand the depreciation concept more easily. So depreciation section 32 says, depreciation will be allowed on tangible or intangible assets which are owned wholly or partly by the assessee and used for the purpose of business or profession on the WDV of the block of asset at prescribed percentage. What's the definition of block of asset? Block of asset means a group of assets falling having same rate of depreciation. Once an asset comes in a block, then its individual identity ceased. Like block of asset will be create having same rate of depreciation. For example, in our income tax provision, buildings having rate of depreciation 10%, and furniture also having rate of depreciation 10%. For example, I have building of 50 lakh rupees and I have furniture of 10 lakh rupees. So in accounting, generally, we show asset on the basis of nature. Different nature assets should shown separately. But under income tax, there is a concept of block of asset, which says if the rate of depreciation is same, then we will treat it as a one single asset. And that will be shown in a single block of asset. So in income tax, I can show it like this block having 10% of rate and value is 60 lakh. There is technically no building, no furniture now. There is a block only of asset which is having a depreciation rate of 10% and that value is 60 lakh. We will not say that in this block there is a furniture and there is a building. Whether we have this 50 lakh, 3 separate buildings, and we have 5 kind of different furniture. It does not matter. Under income tax, if the rate of depreciation is same, then that asset will be treated as a single asset. So we will say we have a block and we have a single asset value rupees 60. In the same way, on motor car, under income tax, DAP rate is 15%, and for other plant and machinery, again DAP rate is 15%. So we can show it like this block of 15% DAP rate. The single value, whatever the aggregate of these two 15% will be shown over here. For example, 20 lakh. This was 5 lakh. This was 15 lakh. So we will say we have a block of 15% and its value is 20 lakh rupees. So those assets having same rate of depreciation will form part of a single block, and that is called block of asset, and it's clearly stated over here. Once a asset form part of block, then its individual identity ceased. For example, we will say now we have a block of 10% DAP rate and the value is 60 lakh. So we can assume it like a single asset, value 60 lakh, the DAP rate is 10%. We can say 20 lakh, we have a block of 15% depreciation, the value is 20 lakhs. So single asset having a value of 20 lakh, DAP rate 15%, and single asset value of 60 lakh, rate is 10%. So that is the concept of block of asset. Next is how we charge rate 0%, I have told you, or when we need to charge rate 50%, or when we need to charge rate that is full rate of depreciation. This topic now we are going to discuss. So we will make a diagram for it, we will make a chart for it, and when I will complete my PGBP all 5 sessions, after that I will upload 4 diagrams in which the summarized provision regarding this whole PGBP chapter will be in a summarized chart presentation. So I made all the chart diagrams for you, but I will not upload it right now. I'll upload it after our 5 sessions of PGBP. So let's move on to the provision to find out when we need to apply 50% rate, when we need to apply 100% rate, and when we are not going to charge any depreciation. Okay. So asset purchased in previous year, that is 22-23. So if there's any asset purchased in previous year 22-23, when the rate will be 0%, when the rate will be half of the normal rate, and when will be the rate normal rate, we are going to discuss. If there is any opening block of asset value, opening value, like on 1st April, then always normal rate will apply. We are the bifurcation, the Separate provision for applying 0% or 50% or full rate of depreciation is only for those assets, those purchased during the previous year. So if you purchase any asset during the previous year, then there will be two separate situations. That will be purchased in previous year, but not put to use in previous. So if you purchase any plant and machinery, building or any asset in previous year, that is 22-23, and you does not put to use that asset in previous year 22-23. In that case, there will be two situations. That what will be the depreciation in previous year 22-23, and what will be the depreciation in subsequent year. SY is subsequent year, matlab previous year, next previous year, 24, 25, etc. So if you purchase an asset in previous year 22-23, but does not put to use it, then depreciation in that previous year will be 0%. You cannot claim depreciation on that asset until you put to use that asset. It cannot form part of your block of assets. So you cannot claim any depreciation on any asset which is purchased in the previous year, but not put to use in the previous. What will happen in next subsequent year? That means subsequent year 23, 24 onwards. So if it does not use in subsequent year also, no debt until unless asset will be put to use, you cannot claim any depreciation on it. So if in previous year 22-23 it does not put to use, no depreciation. If in subsequent year again it does not put to use, there will be no depreciation until it is put to use. If put to use in subsequent year, any subsequent year, 23, 24 or 24, 25, any. So if put to use in any subsequent year, then normal debt rate applied. For example, if debt rate is 15%, then in subsequent year, if you put to use, then normal rate, that means 50% can be claimed on that asset, irrelevant of number of days used. Number of days used irrelevant. Like use for more than 180 days or half, it does not matter. Asset purchased in previous year plus put to use also. So in first case A, asset was purchased in previous year but does not put to use in previous year. So in which year it will be put to use, you can claim normal rate of depreciation. But if it's purchased in previous year and put to use in the previous year, then again, what will be happen in previous year dep rate and what will be happen in subsequent year. In previous year, now we need to check if it is used, put to use for more than or equal to 180 days. Then normal dep rate, that means 15% can be claimed if it is put to use for more than equal to 180 days. Or if it is less than 180 days, then half of normal rate will be applied. That means 7.5%. In subsequent year, if you put to use in previous year for less than more than 180 days, there will be different rate. But in subsequent year, even if it is less than more than 180 days or equal, does not matter. Always 15% DAP or normal rate will be charged. So the 180 days concept is applicable only in case of asset purchase in the year and if put to use in the same year. So in that year, if, for example, if I purchased any asset in previous year 22-23 and put to use in the same year. Then only you need to check whether it's used for more than 180 or equal to, then full rate apply, or less than, then half rate. But if asset is in subsequent year, whether in this case or whether in this case, if asset is put to use in same year, in the year purchase, then only 180 days concept applicable. But if it is a subsequent year, then it does not matter whether it's used for more than equal to 180 days or less than, it does not matter whether in this case or this case. So you need to check it out whether my asset is purchased in the same year, it is put to use in the same year, or it is not put to use in the same year. If it is not put to use in the same year, DAP will be 0. Even in subsequent year, if it is not put to use, DAP will be 0. In the subsequent year, whenever it will be put to use, the full DAP rate can be claimed. If it is purchased in previous year and put to use in the same year, then you need to find out it is more than 180 equal, full rate, half, less than. In subsequent year, it will always be full rate of depreciation will be charged. This diagram will also be uploaded later after your sessions, 5 sessions. Back to the provision. So the provision has been written over here. Regarding that, we just made a chart, the diagram. The provisions already is here. If you want, you can read it through over here also. Calculation of block of asset. We need to find out the opening WDV of the block. Generally, it will be given in the question. Actual cost of asset purchased need to be add back and put to use. You can see actual cost of asset purchase and put to use. Only those assets will form part of my block of asset. So if you purchased an asset and does not put to use, it will not form part of my block of asset. That's why we cannot claim depreciation on that. Until it is put to use, it will not form part of my block of asset. And if it is not form part of my block of asset, we cannot claim DAP on that. Less any money received or receivable in respect of assets sold, destroyed, etc. during the previous year. The reduction of money received shall only to the extent that WDV becomes nil. For example, this is opening WDV is 10 lakh, asset purchase 2 lakh. So now my total value is 12 lakh. And I sold my asset for 15 lakh. So I cannot deduct 15 lakh out of 12 lakh. I will deduct only 12 lakh out of 12 lakh. So it will be 0. The balance cannot be negative. So it has been written that you only reduce the value till the WDV becomes nil. After that, there will be WDV for depreciation. You will apply the depreciation percentage, and then that will be the WDV closing for the purpose of income tax, which will become the opening WDV for next year. Additional depreciation is also a concept which is extra. In extra with depreciation, you are normal depreciation provision and we have additional depreciation provision also. So I think we have already crossed the time limit. Let me see the queries and then we will close our session today and we will take up additional depreciation provision concept in our next class. Okay. Let's see if there is any query. Okay. Vaishali is asking, sir, rent received by partner and individual is on other income head. If rent is received by a partner, then it will be for a building, then it will be income from house property. Okay. Next, Vaishali is asking, an interest on loan for building used in business is PGBP expense. You must have read the provision like if any asset put to use till the construction of that building. The interest paid on loan will form part of the cost of the building. After construction, yes, the interest will form part of your business expenditure. Next, Singh Rajiv Kumar is asking, Miss Singh Rajiv Kumar, okay, in case of lease of asset, the depreciation would be available or not for deduction purpose to the owner. Yes, owner can claim the deduction in case of leased asset or asset given on rent or hire purchase, etc. Vaishali Bindal, I have answered the same question. Sir, in lease or rent asset debt not allowed in PGBP, it will be allowed to the owner, not the tenant or lessee. It will be allowed to the lessor, etc. Navneet Krishna is saying, sir, if the building constructed before 2 years but not used for the business, whether building value will be on fair market or actual, sir, will it be start using? The actual cost incurred by you will form part of your building. Always, we will discuss the section 43(1) regarding the actual cost of asset. And it says the actual cost means actual cost of the asset to the assessee. So there is no fair market value concept applicable. If you did not use the building for 2 years, so in the year you will start using it. And in that year, the value of the building will be taken. If it does not put to use, the cost incurred by you. Sir, 180 days are from date of put to use or from first day of financial year? The date from put to use. Bhumika is asking, 180 days will be counted from the day put to use. For example, an asset is purchased from on 1st May 2022, but is put to use from 1st November 2022. Then we will count the day from 1st November 2022 till 31st of March 2023. That will be less than 180 days. We have a numerical regarding this. So in the next class, we will discuss the numerical regarding depreciation. You can see after additional depreciation provision, this is the additional depreciation provision and terminal depreciation provision and the rate of taxes. We will move on to our illustration number 1, in which I will explain how to calculate depreciation 50%, full rate, additional depreciation, what value will be taken, etc., etc. So, Bhumika, we will discuss how we calculate 180 days when I will explain illustration number 1. Sir, if asset purchased in subsequent year and put to use less than 180 days, Vaishali is asking. So 50% debt. So we add amount on WDV. The rates in different. Sorry, Vaishali, the question is wrong. You should read it whatever you have wrote. You are writing, sir, if asset purchased in subsequent year. You cannot purchase asset in subsequent year. Subsequent year will be defined on the basis in which year you are purchasing the asset. So if you are purchasing asset in subsequent year, so that year is not subsequent year. That is the previous year for that purpose. Let me explain you what you are asking. You are confused a little bit. Okay, for previous year 22-23, if you purchase any asset in this year, then subsequent year for this asset will be previous year 23-24. But if you purchase any other asset in 23-24, then for that asset, this is not subsequent year. Now for that asset, it is previous year. Like for this asset, 22-23 is previous year and 23-24 is subsequent year. But if you purchase any asset in any year, that year cannot be called its subsequent year. That will be called its previous year. So for this asset, subsequent year will be 24-25. So your question is, sir, if asset purchased in subsequent year, so that year cannot be called its subsequent year. That will be its purchased year. So you have to understand it. When I'll explain illustration number 1, then you will understand what I'm trying to explain it to you. Fine. Mr. Kanga, very complicated name. Owner of the lesser can avail depreciation only if it's a business for them. Am I right? Yes, you are absolutely right, Miss Kanga Rahat. Owner or lesser can claim depreciation only if it's a business. But even if it is not a business, then also he can claim depreciation, but under income from other source. Let me show you. In our provision, this concept has been written over here. I have told you that you should go through the provision once. So you will find out this provision already being written over here. So Ms. Kanganarat, what you are asking, it is already written over here that if you are a lesser, then you can claim deduction of depreciation if it is your business. But even if it is your not business, even that, in that case, you can claim the deduction under section 57(2), which is over here. I have explained it. You can go through it. You will understand. Vaishali, okay, corrected is a mistake. And now she's asking, sir, if asset purchase in previous year and put to use, but less than 180 days. So 50% debt. So we add amount on WDV, the rate is different. No, we did not. Only 50% depreciation amount can be claimed. And then 50% will be allowed, will be deducted from the net profit as per accounting provision. I have explained you when we will discuss the question, illustration number 1, I will explain you how to do it. Just understand now what I am teaching to you, when the rate will be 50%, when the rate will be 100, and when the rate will be 0. How we need to implement it, I will explain it to you. Okay. So I guess we have discussed a lot of provision. One request from my side to all of you, please go through the provision. Please read it carefully. And my always have a motto to tell every student, this is the success mantra for you. Revise twice. That's my advice to make you wise. Please revise every provision, every topic, every subject twice. If you will be able to revise all subject twice, I can make assured the passing probability of your will be in examination will be more than 80%. So please revise twice. That's my advice to make you wise. There's no shortcut. Do revise it, and we'll be back in our next session. Till that, I wanted you to revise whatever I teach you till now, and there will be starting MCQ session in our 3rd of July classes. In the starting of the class, I will take MCQs. Till now, whatever I have teach you. So just be safe, study hard, and see you soon. Manish ji, can